Welcome to this question. You have 15 minutes to read the question. 3D PrintShop Limited. 3D PrintShop is listed on the Johannesburg Stock Exchange. 3D PrintShop is a manufacturer of 3D printers and a wholesaler of various electronics, 3D printers and other contract additions. The contract terms and conditions relating to the sale of a 3D printer is as follows. The contract provides the customer with a 30-day, 100% money-back guarantee. During the past 3 years, only 2.22% of all 3D printers have been returned for a full refund. Included in the contract is a free 1-year warranty, which covers the full replacement of any 3D printer due to manufacturing defects. The warranty assures the customer that the 3D printer complies with the agreed upon specifications and will operate as specified for 1 year from the date of purchase. The warranty is not sold separately, and the estimated cost of this warranty is 14,000 Rand per 3D printer. During the past 5 years, only 5% of all 3D printers have required replacement within a period of 1 year due to manufacturing defects. Right, guys, we are able to identify that we will have to look at a contract most probably. Remember, we don't have the requirement, therefore don't really speculate. But when you look at the information, and we know that we need to study IFRS 15 for this test, most probably IFRS 15. The contract also provides the customer with the right to receive training services regarding the use of the 3D printer at no extra cost. 3D PrintShop regularly sells separate training services to customers without the purchase of a 3D printer. The customer has the option to purchase these training services separately. Electronics. During the financial year ended 31 December 2019, 3D PrintShop sold electronics at a standalone selling price of 12.6 million. On 1 January 2018, 3D PrintShop introduced a customer loyalty program that rewards customers with 1 customer loyalty point for every 200 Rand spent on any 3D printer purchased from 3D PrintShop. Each loyalty point is redeemable for a discount on future purchases of electronics. The estimated standalone price of 1 point is 4.40 Rand. 3D PrintShop expects that 30,000 points will be redeemed cumulatively. Remember, guys, redeemed, this is used for revenue earned during the financial year ended 31 December 2018. At the end of the 2018 financial year, only 19,350 points have been redeemed by customers. As at 31 December 2019, 29,000 points have been redeemed cumulatively in respect of 2018 sales. And guys, ensure that you understand this. They indicate to us for 2018, remember, there is your actual redeemed, there's your expected redeemed, and there is earned. Remember, the earned will relate to the sales that occurred. The actual redeemed for 2018 in terms of 2018 sales is 19,350. They expect 30,000 to be redeemed, and we need to calculate the earned. Right, then they indicate to us 29,000 points have been redeemed cumulatively in respect of the 2018 sales. Therefore, now in 2019, they are able to identify that this total actual is now 29,000. This 29,000 relates to the 2018 points. Okay, 3D PrintShop still expects that 30,000 points will be redeemed in total. Total sales for the 20.18 financial year amounted to 9.8 million, which is the standalone selling prices of the products. At the end of 20.19 financial year, 30540 points have been redeemed by customers. Therefore, in our 20.19 year, remember now, this relates to the 20.19 sales. They indicate to us the actual points redeemed is 30540, and they expect 36,000 to be redeemed, 36,000 in total in respect of our 20.19 sales. Then guys, again, we will be able to determine how much points were earned based on the sales. The accountant correctly posted the following journal entry for the year ended 31 December 20.18. Guys, correctly, therefore you do not have to recalculate this. If you look at the information provided, remember, we have actual, expected, earned. Let's move on. Contract with Online 3D Limited. Online 3D Limited is a foremost 3D printing house that provides 3D printers to research departments of universities nationally. On 10 November 20.19, Online 3D entered into a contract with 3D PrintShop and purchased 80 3D printers at a standalone price of 55,000 Rand each. 3D PrintShop manufactures these 3D printers at a cost of 35,000 Rand. Online 3D has returned 2 3D printers for a full refund within the 30-day period. Remember guys, with this purchase, they receive the option of 30-day money back guaranteed. They receive a warranty for 1 year, and number 3, they receive the training free. Therefore, with each printer, this is the contract. At 31 December 20.19, although being unconditionally entitled to payment for the units delivered to Online 3D, 3D PrintShop has not received any payment from them. Joint arrangement with Global Print Limited. Immediately when we identify joint arrangement, remember, IFRS 11, we will have to identify if there is joint control. If yes, this can either be a joint operation or a JV. 3D PrintShop has identified an ideal opportunity to assist school learners in South Africa by taking 3D printing opportunities to them by means of mobile printing devices. This will assist school learners with school projects and might lead to school learners building and developing their own small businesses with these products printed. Management of 3D PrintShop has approached Global Print Limited, an unrelated entity, to form a consortium to make this opportunity a reality. A separate entity, Print Play Limited, has been formed. 3D PrintShop and Global Print each have 50% shareholding in Print Play. The companies have signed a consortium agreement that outlines the activities of the arrangement and establishes a joint arrangement committee. Each company has a representative in the joint arrangement committee, and all decisions require an anonymous consent. Very important when you think about IFRS 11. 3D PrintShop is responsible for the manufacturing of the 3D printers, while Global Print is responsible for supplying and fitting the mobile devices. Each company individually uses its own resources and expertise in order to manufacture, supply, and distribute the mobile 3D printers jointly. The two companies share revenues from the sale of mobile 3D printers and jointly incur expenses. The revenues and common costs are shared as contractually agreed in the consortium agreement. A separate bank account is established through which revenue is received and shared costs are paid. The bank account is in the name of PrintPlay. Each company incurs its own separate costs and recognize these costs fully in their separate financial statements. These costs include labor costs, manufacturing costs, supplies, inventory, and unused parts of work in progress. 3D PrintShop and Global Print retains full ownership of the assets used in the arrangement and are separately liable for the obligations incurred. You may assume that the terms of the consortium agreement did meet the criteria for joint control in accordance with IFRS 11. Therefore, guys, please don't waste your time. They indicate to us that there is joint control. Therefore, if there's joint control, we need to establish if this will be a joint operation or a JV. Most probably this is where our focus point will lie. Additional information: assume a normal income tax rate of 28% and a capital gains tax inclusion rate of 80%. Ignore VAT and dividend tax. Let's have a look at the requirement. Remember, once you are allowed to write, you need to allocate your minutes to each section. This is the marks times 1.5, and this will be the minutes that you are allowed to spend on each section. Therefore, requirement A, 13 marks, 19.5 minutes. Round this down, guys, and please stick to the time allocated. B, 13.5 minutes. C, 19.5, and D, 7.5 minutes. Right, let's briefly read through the requirement section. A, with reference to 3D PrintShop Limited, identify and discuss the performance obligations of 3D printers and other contract additions in terms of IFRS 5. IFRS 15. Guys, remember, we have our steps. This is our step number 2. Identify the performance obligations, the promises. Right. Your answer should clearly indicate if the promised good or service in the contract are separate performance obligations or not. 12 marks, 1 mark in terms of communication skills. B, prepare the journal entries to account for the customer loyalty program in the financial statements of 3D PrintShop Limited for the year ended 31 December 2019. C, prepare the journal entries in the financial statements of 3D PrintShop Limited to account for all the possible journal entries arising from the contract with Online 3D Limited for the year ended 31 December 2019. 13 marks. And D, provide a memorandum to the management of 3D PrintShop Limited to discuss the classification of the joint arrangement. Remember, guys, they've indicated to us that this is a joint arrangement. We need to identify if this is a JV or a joint operation. 5 marks. And please remember your format. Please note, round off all amounts to your nearest rand. Journal narrations are not required, therefore don't waste your time. Ignore that, show all your calculations, and your answer must comply with IFRS.